Explore exactly what it takes to become a successful day trader and the power of consistency from the minds of the trading's elite. This is the Beyond the PDT podcast. Here are your hosts, Bryce, Tuohey, and Matthew Monaco.
Welcome back, traders. This is episode 16 of the Beyond the PDT podcast. I'm one of your hosts, Matthew Monaco, and in this episode, we interviewed John Papa, who is also known as SublimeTrades on Twitter. John first got noticed in the trading industry about 2 years ago when he turned his $16K loss that he developed trying to learn how to trade penny stocks, grinded back to profitability, trading some of these OTC style setups that some of our previous guests, like Jack, Dom, and Kyle, who were episodes 6, 8, and 9 of this podcast. Now, John Papa has a different style now and has actually even expanded into listed stocks, focusing a lot on reverse split plays, which we talked about in this episode, and focus on one of his big recent wins on CTRV. We also focus a lot on how he has managed to maintain consistency despite experimenting and trying all these different strategies between the NASDAQ and OTC market. One thing I really took away from this episode was the Kelly Criterion, which John describes as the maximum logarithmic scale of wealth, which is how he based the risks on all his trades. This criterion was originally developed for blackjack. John was once a blackjack card counter, so it makes sense that this carried over into his trading. Last thing before we start the interview is I'd just like to ask you to subscribe on whatever platform you're listening to it on, and please leave us a review. Let us know how we're doing. It helps our ratings a lot and also gives us some good feedback on how we can improve the show. So let's dive right into episode 16 with John Papa.
Hey, what's up?
What's going on?
Hey, how's it going?
Good. How about yourself?
How's your weekend?
It's been good. Some yard work. I had to chop down big pine tree that was dead in my yard.
Oh, nice. Yeah, you guys had some, I mean, I say you guys because you're both in Colorado, but Colorado had some crazy storms, right? Over the winter or something?
Yeah, dude, we had a couple big blizzards.
That's nuts. It was actually nice for the first time in New York this weekend, so that's pretty lit. Finally, like above like 70. It's freaking awful out here.
The weather out here is beautiful, I've got to say. You've been out here your whole life or no?
Yeah, pretty much. Yeah.
Yeah, it's a good place. I like it. All right, so can you kind of tell us a little bit about yourself in terms of like an introduction as to how you got into trading? Just for those who don't know.
Yeah. So I'd been following Tim Sykes on Instagram. I had like found him through some like article on Maxim magazine or something, and like the top like 5 Instagram accounts to follow. So I just added him, and I saw, he was always posting stuff about showing off his like lifestyle and everything, and it seemed kind of a little bit scammy, I guess.
Too good to be true.
So kind of like a get rich quick scheme or something. So I ignored it for a good like 6 months or so, and finally, I don't know what it was exactly that got me to look a little bit closer, but I decided to like take a closer look at it, and I went and like read a bunch of his blog posts and started watching like YouTube videos and realized that there probably was, a way to make money doing this. And once I like decided to do it, I just kind of jumped in, signed up for like his services, and opened up a E-Trade account and started trading. So,
wait a minute, how long ago was that?
2 years ago. It's been just over 2 years since when I first started trading.
Gotcha. And have you just been like, were you in the Tim Challenge following the video lessons along, or were you just, I think the silver, penny stock and silver package was that where you were?
Yeah, so I started out with the penny stock and silver, and then I think within a month I decided to join the his challenge. And that was really helpful because it got me like all of his DVDs, which helped. That had a little bit more structure, to learning than just, he's got an insane amount of video lessons, and it's hard to like work through that and get when you don't know anything, it's just like an overwhelming amount of information.
I definitely know that feeling, man, for sure. When you say you jumped right in, I assume you didn't like quit your job or anything, right? So you're still working full time while you're trying to trade?
Yeah, definitely. I'm still working full time. I didn't really like spend any time studying or learning anything before I started. I had assumed that I could just follow his alerts and like make money that way while I learn how to trade on my own. And that did not go well. So it probably took me a couple months to realize I need to not follow his alerts, and I just needed to actually learn what I was doing. The whole thing like was way. I had like unrealistic expectations going into it. I thought like maybe it's going to take me a couple months to figure it out, and then I should start being profitable. And I ended up just consistently losing for about 6.5 months.
I remember telling Matt when I first started, I was like, yo, Matt, if I just take like a $1,000 SureTrader account and just make like $500 a week, I'll have like $4,000 by the end of the month. Like that's all I have to do. It's that simple, right?
Yep.
Of course it is, right? That's how it always is when people start off. No, it makes sense. So when you kind of started to realize you needed to put some more work into it, what did you change about your outlook on trading? Obviously you realized you needed to do more stuff. How did you actually go about doing it?
Yeah, I think some of the big things were I was watching a lot of Tim Grittani's materials because he's been extremely successful, and I was trying to like figure out like how was he able to turn like a very small amount of money into millions of dollars. And with him, he had said that he had focused on 2 setups at the beginning, and that was like probably the first big thing that turned my trading around. Was I realized that before that I was trying every type of setup that I had learned up to that point, and a lot of my early trading was also just following, just like kind of chasing moves. If there was just something on my scanner that was moving big, I would just buy it, and it would usually be the top, and then it would pull back and I would take a big loss. But once I realized I needed to be tracking trades like per setup, that was the start of what got me on the right path. But even then it was probably a couple months after I started tracking what setup like each trade was before I could like break down all of my trades by setup and find out that some of the ones that I was actually focusing on where I thought I had an edge, I actually didn't have an edge based on my results.
So what kind of stuff were you doing to track? I know that's kind of a question we had on Twitter. How did tracking not only help you? Obviously, it shows you where your edge is, but what did you do to really track each trade and each setup?
So I started out like really basic, where it was just like entry and exit price, average, or my share count. If it was long or short. And then I started adding things like the setup, like I mentioned, the time of day, what exchange it's on, and then some other things based on my actual trades. Like when I would enter the trade, I'd put in an entry in my spreadsheet, and one of the things would be what level I was risking off of, so I could see how much going into the trade, how much I was risking. And then once I got out of the trade, I could see how my actual results were compared to my risk. Like, did I win 2 times my risk, or did I lose? Did I cut at my risk, or did I lose more than what I intended to risk? And then as time has gone on, I've added more and more things, just anything that I can think of to like break a set of trades down by some factor to give me a better insight into how I'm doing on a specific trade. Because I think a lot of things that like newer traders especially think that they seem to like focus on the setup, finding it's kind of like there's 2 edges in the market. It's not 2 edges, but there's like that. There's an edge in the market created from some inefficiency. And so that's going to be like a setup that you could potentially play to make money. But just because that inefficiency exists, it doesn't mean that it's going to like fit with your personality and that you're actually going to be able to execute that setup in a profitable way. And so that's a big thing that really helped me also, is that you can, if you're forcing yourself to try to play one setup and it's just somehow conflicts with your personality, it's going to be much more difficult for you to actually try to change yourself and change like your like natural tendencies, rather than just go find a different setup that may work better with your personality.
Absolutely. Now, what do you recommend people do who are kind of new to find that setup that fits along with their personality? What did you do? Was it a lot of experimenting?
Yeah, and I think that's kind of all you can do at first is you just need to experiment and try as much as you can, and then make sure that you're tracking that data so that it's going to be valuable, that like you're most likely going to be losing during that time. And so you need to be using that time though to just try all the different setups, get experience just like watching the market, and then try to hone in on where you're most comfortable and just the setups that make the most sense to you.
I think that's great advice. Bryce and I had this conversation last week a lot because, I mean, we're like accountability buddies, I guess, but we're not part of Mick or anything, right? So we talk all the time, and I've been really shifting more towards just the OTCs and kind of like overnight longer term plays. And I was talking to Bryce about it, and his personality doesn't really fit with that at all. He tried it a little bit and he just wasn't finding any success or anything. And that's okay, because there's not one way to trade. Everyone has a different personality, just like everyone's going to trade differently, but that doesn't necessarily mean you're wrong, for example. So I think that's great.
Yeah, exactly. Yeah, it's much better for you to try to learn as much as you can from other people just to get good ideas, but then you've really got to customize your trading to yourself.
And that's just the one thing. I'm sure when you guys are like scrolling through Twitter or Instagram every now and then, you see those, the really fake people who are like, oh, I'll teach you the one strategy that I use to make millions. It's like, okay, well, you know what? One, maybe you actually did that, but you can never just give somebody a strategy. It's all about finding what's going to work for you. And again, it all comes back down to the whole discipline factor. I was reading somewhere today, you can be given the best strategy ever that works 100% of the time. That doesn't mean it's going to actually work for you if you don't know how to cut your losses, if you don't know how to know when to exit, all this and that stuff. So just going back to that,
Once you get to the point where you know a setup or a couple setups where you have an edge, then another big part of the discipline is narrowing down your focus to just play those and cut out all those other random trades.
So could you maybe elaborate on just what your setup or couple setups are or were in the beginning? Because I know you have a bunch that you're working on right now. But in the beginning, from listening to the Steady Trade podcast that you were on there a couple of times, you explained how you took some big losses in the beginning and then you obviously turned it around, recovered it all from just one or two setups. So could you explain maybe what your personality shifted towards there?
Yeah, in my first 6.5 months when I lost about $16,000, just tried to play everything. And once I had the stats down, I found that just multi-day breakouts were some of my biggest wins and just some of my highest win rate setups. And so I ended up focusing just on multi-day breakouts. And then probably within the first 2 months of just playing multi-day breakouts was when I also kind of really started getting the difference between listed stocks and OTCs. I was having a lot more success with OTC, so then I cut out the listed trades and I just played just the OTC multi-day breakouts. And I made it was probably over a 4-month period from that low point. I had increased my account 400% off of its lows. And I recovered all of my losses and then was up quite a bit.
Awesome. This was early 2018, right? Did I have that time frame right?
Yeah, it was. So I got my setups down just in time for when the Bitcoin related stocks started running, and there was a big weed sector run right at the end of 2017 and beginning of 2018. So that definitely helped, and there was just a lot of plays that fit my setup, and I was able to take advantage of it almost every day.
So have you been using this setup, since then? Is this still something that you're using?
Yeah, and it's been, I'd say until about the beginning of this year, it had been my only bread and butter setup that I'll pretty much always play and that I've been consistently profitable with. And then I don't know exactly what happened, but in February, there was a really good OTC market and I did not take advantage. And it may have been that I was focusing a little bit more on these listed setups that I'm playing now. And kind of since then, since March, I've only played a couple of OTCs because the OTC market is kind of quieted down and there's no hot sectors right now. And now I'm mostly just focusing on listed plays.
So what listed plays are you focusing on? Because, you're clearly having consistency now, even though you've left that bread and butter setup. Could you explain those?
Yeah. So my main long setup for listed plays has to do with recent reverse splits. And it's basically just low float stocks that have a good news catalyst and get an unusually high volume day, just so that they're in play. And then those tend to make really big moves. And then I also started shorting again. That shorting was one of the first things before I broke down my trades into setups. I was tracking long and short and I noticed that I just completely sucked trying to short stocks. But so at the beginning of this year, I finally opened up another account that has good locates and started shorting again. And I think like my experience long over the past like 2 years has like really helped me identify, I guess, failure patterns in long plays. And so I know like I have a better understanding of when to short. So I'm shorting overextended gap downs, OTC like pump and dumps.
Gotcha. How were you able to maintain this consistency, even though you were shifting from your OTC multi-day breakouts to these listeds? What do you attribute to that?
A big part of it was that like I had been focusing on these new listed plays for probably like 4 to 6 months before I actually started getting consistent with those plays, which was kind of at the end of last year. I had just started learning more about the fundamentals in listed stocks and how to read SEC filings, and that like really helped me understand why these moves are happening. And so it took me a few months of playing those listed stocks alongside my OTC breakouts. And so those OTC trades are what would like keep me afloat while I'm like losing money trying to learn these new setups. And then it was something I guess I do with all of my setups is like once I have like a big picture setup to where I think I have an edge, I'll start like narrowing my focus and honing in on how to like best exploit that edge. And a lot of that is how to eliminate possible trades by kind of having like more criteria for the setup. Which like with the listed stocks, a big thing has been if I play them like with a news catalyst, they're much more likely to succeed than if I'm just playing them based on just a technical move.
So overall, would you kind of attribute some of this consistency in a different setup just to overall experience that you've had throughout the past 2 years?
Yeah, that's definitely a big part of it. Something that the OTC, like playing OTCs gave me was like what I feel is like a fairly good like understanding of just the technical moves that stocks make. Because when I was playing, and when I still play OTCs, I really don't pay much attention to anything but the chart. For the most part, like the float doesn't really matter. I can play like really high float stocks because they might be like really low priced. If they're like 5 cents, you could have like a 200 million float and it might move the same way that like a low float listed stock moves, just because people are going to be buying shares in such a larger quantity at a lower price. So with OTCs, yeah, for the last, like a year and a half, I was just focusing on understanding how to interpret chart patterns and like kind of understand like how to anticipate which way the stock might go based on the pattern. And so all of that translated into the listed stocks. Now that I have some other criteria with listed stocks based on the fundamentals, once the right thing happens in the stock I'm watching, then I can get in and play it, but then I just play it based on the technicals at that point. And so it's, yeah, definitely experience has been a big part of it. Something early on, like I used to have a big problem cutting losses. Some of that was related to the type of setup I was playing. Like I used to focus early on, I was trying to focus on dip buying morning panics. And since I can't cut losses, and I have a tendency to try to get like home runs, and like dip buys are really bad for both of those tendencies because you need to be able to cut your loss if you buy a dip and it just bounces a little bit and then breaks down below the previous low, it's probably going to keep going lower. And so me not being able to cut losses was bad there. And then me wanting to get a home run, I was always looking to get like a dip buy where it would dip and then end up like going green maybe and keep going higher like for a few more days. And that's just so rare that a stock will do that. Usually that big morning panic is like the beginning of the end and you're on the backside now. Yeah, it was just through experience, I guess, just figuring those things out and that they don't fit with my personality.
You said you had trouble cutting losses. Is that still something you have trouble with and you've now just kind of shifted the way that you trade, or have you, learned some better discipline? And if so, what have you done to do that?
A little bit of both. Like one thing is I used to bag hold stocks for like weeks or months, and usually with those I would try to average down. And again, just from like having all of the stats on my trades, I found like all of my biggest losses were when I would average down. And so it's, it was already going to be a bad loss. And then I end up making it like 2 times or 4 times bigger than what it should have been if I would have just had my initial position. And then the other part of it is just related to the setups. Like, I need to help me with the cutting losses. I need to have setups that have very clear failures. So like a breakout, like if something breaks out and then it falls back below that breakout point and starts consolidating underneath the breakout, then that's very clearly no longer a breakout. Or for like a shorting an overextended gap down, that's the stock has gone red, and then I try to short it as it's bouncing back up towards green, and I'm risking off of green. And so ideally, it bounces in the morning towards red-green and then starts fading off from there. But so if it can go green, then now that's like it's a very clear black and white shift. It's not like I chose just some level that I found off a chart or that was like 5% away from my entry. And then because if I do something like that, then I'll be more likely to give it room and then end up letting my loss, go farther than I intended to. But if I'm saying I'm risking off of red green, that's just really clear. If it's red, I should be okay. And if it's green, I just need to get out because it doesn't fit my setup anymore.
100% agree. And I think that's something like even Matt's trading that I've seen lately is like when you find an actual level to risk off of instead of just like, oh, I'm risking this percent of my entry, it gives you a lot better chance of 1, knowing when to cut, and 2, there being a reason for you actually being in that trade, instead of it just being a very random entry.
Definitely. First of all, I've been following you on Twitter for like basically 2 years. Anyways. But you tweeted, I don't know, a couple months ago that like you've made over $100,000 or close to it trading OTCs, but you're still trading these listeds. So, why is that? Is this a long run game for you? I think you've got this long run mindset that just a lot of people don't have when they get into trading.
Yeah, 100%. And that's a big part of that is, so I'm a software engineer. I would like to transition to trading full time, but there's a good chance that if I do make that transition and I leave the software industry, if I'm out of it for a few years, it's going to be very difficult for me to get back into it if I need to. Like if I were to go to trading full time and then that ends up not working out and now I got to go and get a job again, just the way the software industry works, like you really got to be up with like the latest technology and you just kind of have to be in it. And it's always easier to get another job in the industry if you're, currently working. So because of that, I've just needed to make sure that I really have an edge and like an account that's going to be able to sustain me, for the rest of my life. And also because of that, I haven't had to I'm not like living off of my trading. And so the money that I make with it is kind of meaningless right now. It's just a number in my account that goes up or down, but it doesn't have like a real effect on my life at this point. And so I had always wanted, before I started going full time, I wanted to be able to both trade long and short and on OTC and listed exchanges. And so I finally got to that point where I have one long setup on OTC, one long setup on listed, and then one short setup on listed stocks and 2 short setups on OTCs. And so now that I kind of have that variety, I'm ready to try to just really focus on those setups and just start growing my account as much as possible, and try to just cut out all the other random trades.
So would you say that, like, going back to your idea of the money that you make in your trading account doesn't really have a huge effect on your life as it is? Does that actually help you a little bit, though? The fact that you're not, like, feeling pressured to make money every day?
Oh, yeah, I think so. Like, it's definitely, I think if you're pressured to actually, like, make money that you need to live on, that's going to be forcing you to take bad trades. There's, like, most of the setups that I play, the trades don't come around every day. And especially, like, that's one reason why I've been trying so hard to learn listed stocks, is because the OTC setup I play, like, is very hit and miss throughout the year. And so, yeah, like, if you have to, or if you feel like you need to be making money every week or every day, like, you're just going to be forcing things, and that's never a good thing.
I love the mindset. Going back to my Twitter creepiness, right? I creep on Twitter. You recently had a sick trade on one of your reverse splits. I think it was CTRV. right? Could you maybe walk us through that? How you got in it? How'd you size out of it? Because that was a home run trade right there. That was awesome.
Yeah, thanks. Yeah, that one was really good. So let me see how to get into this. So with those trades, like I already have them like on my watch list before I actually play them. Usually like on the day that they do the reverse split, I'll at least see them and I'll start looking into the filings to see if it's potentially going to be something I want to play. And so I'll have it, I had that one on watch and I woke up and normally I'm waking up at 5 a.m. my time, which is 7 a.m. Eastern. So early pre-market. And that's as early as E-Trade lets you start trading. And so I woke up a bit late that day. I woke up at like 6 a.m. and then they had just released some news. I didn't remember what their news was, but the stock had spiked, and like this was one that just based on the fundamentals, I knew that I wanted to play it. And so on most of these plays, as soon as the news happens, like I'll briefly read the headline and maybe some of like the beginning of the news article just to see if like overall does it look positive or negative. And if it's positive and the stock is already showing a positive reaction, which in this case it had spiked from, I don't remember where it was. I think the previous day it had closed in like the $3 range, $3.50, and it was already up at like $6, I think. And so it's already showing like a good reaction to the news. So I just started buying, and that was just a mix of taking the offer and putting bids, putting orders on the bid. After that, like if I can get in early enough, I'm usually risking these ones. They're hard to have like a set level to risk off of based on the chart because they'll make that initial big pop like right when the news comes out. And so a lot of times I'll just be risking more like a dollar or 50 cents depending on how many shares I bought and how much I want to risk. And on these ones, when they work out, they tend to just go up from that point. And so it's kind of like I don't have to worry about the risk as much. And then it's a focus on where am I going to start taking profits. And this one I kind of ended up like selling some and like buying some more on some dips and selling it as it would spike. I had just gotten over PDT like 2 days before this trade, which that was a big contributor to why I was able to make so much on it. Just because before that I usually had to just get my entry in one order. And so if I only get like a partial fill, then I end up with a lot smaller size than, I had wanted. So I don't know. It's kind of hard to explain. Like I had so many like entries and exits on that. Mostly like I'll tend to try to sell it as it's breaking over the previous highs, because that's when there's a lot of buying pressure, and so it makes it easy to sell into that.
So you sell into resistance for the most part in trades like these, or you try to anyways?
No, actually, a lot of times I'll sell just above the resistance level.
Interesting.
So right as it breaks past resistance.
Okay, awesome. Now, can you kind of, you said that you took a lot of entries and exits on this particular trade, and I'm sure this question may actually vary per setup that you have for different, listed and OTC stocks, but yeah. What are your plans for exit? Do you have an exit plan before you even get in the trade, or do you kind of make that as you see the trade working for you?
It's generally just kind of as the trade is happening. The biggest like exit plan I have is to scale out. I'd read some like quite a bit of stuff on like arguments like for or against scaling out of trades. And for a while, I was actually trying to not scale out. I was trying to just sell my positions in one order, because supposedly that may be the best way to do it. Because if you scale out, then your best trades, you're going to end up with like your smallest position size when you're like the most in the money, because you've been selling along the way. But that's always what's worked for me. And whenever I've had like periods of consistent wins is when I'm scaling out into strength. And I think it's just because with the way these low price stocks move, they're just so volatile that you really need to take some profits when you have them. So that's, mainly I'll sell into pretty much any speed ups, like Hive day breaks. If a stock has been like, if it's an OTC and it's been kind of grinding up throughout the day, and then it starts to speed up and get increased volume and starts making like taller candles, I'll tend to start selling into the parabolic move. Of course, if I usually have some that I'm selling on the backside, so because I can be really patient, and so I'm trying to hold and capture as much of the move as possible. But that inevitably will leave me with some shares that I still have, like as it starts coming back down.
Building on the risk, you're a huge advocate for the Kelly Criterion, and use it in your trading. Could you elaborate? What is the Kelly Criterion, and how do you personally use it?
Okay. The Kelly Criterion is a mathematical formula that, let me see if I get this right. I think it optimizes the maximum logarithmic utility of wealth. So basically, it's a way to do fixed fractional betting based on your edge and your odds. So I learned this from playing blackjack. I used to count cards at blackjack. And with blackjack, it's a bit different than trading because you can compute like the statistics exactly. And because of the way that you either lose your hand or you win, you have like fixed payouts. Whereas with trading, all of that's going to be based on when you enter and exit and how, if you scale in or scale out. But ultimately, like the Kelly Criterion says that the percent of your bankroll that you're going to bet is equal to your edge times your odds. So you can calculate it based on, the way I do it is with all the stats that I have tracking my setups, I know what my win rate is for a given setup. I know what my average win is and my average loss. And so the ratio of my average win to average loss and my win rate, I just throw those into a formula, and it says I should bet, say, 40% of my account on this given setup. And then I do something which is it's called half Kelly betting. So instead of betting, like if it said I should use 40% of my account, I'll use 20% of my account. And by reducing my position size in half, it reduces the risk in half, but only reduces the expected reward by 1/4. So you're actually like, if you don't bet full Kelly, you'll lower your risk a lot more than you're lowering your potential reward. But in the long run, the Kelly Criterion should give you like the most chance of bankroll growth by the end, and with the least amount of it's called the risk of ruin, the least amount of like blowing your whole account.
I actually just learned a lot there. I've actually never heard of that before. That's really cool.
Okay.
I'm going to look a lot more into that later.
Yeah, and there's arguments for and against using the Kelly Criterion with trading, but like Ed Thorpe was the one who kind of first really popularized it. I think the guy who came up with it was named John Kelly, and he was a mathematician. And then Ed Thorpe, he was like a professor at MIT, and he wrote Beat the Dealer, which was the first book on card counting. He went on to like have, I guess it was like a hedge fund, and he made, I don't know, like billions of dollars, like, using the Kelly Criterion and doing something with like options. But it's like, regardless of if you use the Kelly Criterion or like some sort of like fixed fractional betting, like position sizing is a huge part of your long-term edge, I think, and like just the long-term results that you're going to see. Because you could, like, if you know a setup well enough where you're pretty consistent in like your win rate and your risk reward, but if you're doing something like saying, oh, well, I don't like this particular chart as much, so I'm only going to bet like 1/5 of my normal size, or I really like this other chart, so I'm going to bet like 10 times my size on this one, my normal size, you can end up with really skewed results, because if you lose that one where you went really big, then you're going to have, much larger loss than you normally would. Or if that one where you thought it wasn't a great trade and you only put a little bit on and it turned out to be an amazing one, and now you didn't maximize your win on that one. So I think it really helps to be consistent in either your position sizing or the dollar amount of risk that you take per setup, and have that be based somehow on your bankroll, just on your total account size.
Yeah, that was some, in-depth stuff there. I'm sure the software engineering background helped you out.
Yeah, that, and just, I was obsessed with blackjack forever. And like, once you have like the card counting strategy down, like the bet sizing strategy is the main thing that's going to influence your results after that.
Yeah, we've talked to a lot of people, and they're big on, earning the ability to size up. are you kind of, do you agree with that? Or, do you agree with starting with smaller size and then sizing up as you become more consistent, or not so much?
So I've always, like, from like day one when I first started trading, like, I knew that I was intended to use the Kelly Criterion for sizing. And so that, like, that formula, like, tells me how much to bet. And so the way that I size is not based on earning it through anything other than my results, I guess. And it's not like if I do like good for like 3 weeks or like this month or something, then next month I'll take bigger size. I usually resize like every day, just based on my previous results and possibly just every trade. So I've got my spreadsheet, has all of this stuff programmed into it. So it just tells me how much I should risk on each of my setups. And then every time I make a new trade, if I win, then my total account value goes up a little bit. And so the amount that I risk will go up a little bit. And so one thing that does do, though, that helps me is that when I size up, I don't size up in really big steps. It could say that I need to risk like 441 right now. And then if I make a good trade, maybe my next one, I'm supposed to risk like $452 or something. Like I'm not ever like sizing up like by like 25% or like doubling my risk or anything. But people really need to do like what they're comfortable with when sizing up, I think. My experience with the Kelly Criterion and blackjack, like I was super comfortable trusting the math. And so that let me just know that, like it said, if I have this edge and this risk reward value on this setup, then in the long run, I'm going to make money. And so I just need to, if I want to maximize how much I make, I need to bet the Kelly Criterion. But some other people may not be comfortable risking more money. And so I don't know, that's not something that I've had to deal with. So I don't really know how to get around that. I just know one of the big things with sizing is to not increase your size too fast. Like I don't think you should ever double your position size because that's probably just going to get you emotional.
You got Kelly from blackjack. You're also a software engineer, though. Have you gotten any skills from software engineering that have carried into your trading?
Yeah. At the end of last year, I started trying to do some automated trading. It didn't go so well, and so I stopped letting that stuff trade for me. But I was using that to just generate trading signals. I think the biggest thing that the software's helped me with has just been, I guess, one thing, just my Excel spreadsheet that I use to track my trades and just being able to make it do what I want it to do. And then at some point last year, I decided to write some software that would help me further analyze my trades. And that just imports my spreadsheet data. And then I can break things down more specifically than my spreadsheet does. And then the stuff that I learned, like when I was trying to write the algorithms to do automated trading, helped me just write some other analysis software so I could see like if like a stock like has like a 20-day breakout, what's the % chance that it runs for like 1 day, 2 days, 3 days, 4 days after that? Like what's the average like high that it's going to hit the next day after the breakout, or what's the average low if the breakout fails that it's going to close at, things like that. But I was using that data for a little while, but I let that influence my trades a bit too much, rather than just relying on the price action. So actually I haven't been using that too much, but it can definitely help me just if I have a setup that I want to try to analyze. Having the software background lets me kind of easily automate and test that setup and just get like a basic idea of if there really is an edge there.
Yeah, that makes sense. So, you're very statistical driven, but then you just mentioned you were very discretionary. What's the balance there? Is it mostly statistics when you're looking at setups and then just discretionary after that?
Yeah. And I think that my like foray into the automated trading like helped show me that like, and it's probably more on the low price stocks and microcaps, just because of the volatility. I think trading them with discretion is going to give you higher returns. Because at least the way that like my algorithms were set up, like it was a very strict thing where they would always do the same thing. They would kind of have the same like win goals, or they would kind of risk off of the same levels. And Actually, I guess it was both a mixture of the automated trading and just all of my trading last year. I found that I can't be too rigid, and you really need to be adaptable to the market. I had kind of like wanted to be able to automate my trades like for quite a while. And so like once I had like my first setup, I started trying to systematize it to say like, okay, I'm going to buy it. Like if it breaks out, I'm only going to get in on the first day of the breakout, and I'm going to sell half of it into the morning spike on the second day and sell the other half into the morning spike on the third day. And actually like that's what worked really well for me for the first like few months that I was playing that setup. And then the market changed and OTCs weren't having those multiple green days after the breakouts. And I was just trying to stick to my system that was working. And I ended up having like a period of just kind of break even. That just taught me that I need to be like way more adaptable to the market as it's changing. And so now like, I mean, I adapt to the market like on a week by week basis, and I'll change like how aggressive I am, or a big part is like how quickly I want to take profits. If there's a lot of volatility and stocks are running for a couple of days, I'm going to try to be more patient. And if it's quieter, or if, especially I've noticed like if the overall market is in a downtrend, I want to be taking profits much quicker. Cause it just seems like the moves reverse a lot faster, during those times.
You said you work full time, correct? And so
yeah.
Obviously, being out west a little bit more makes it probably a little bit easier, but how do you do it? I'm personally curious because I just finally kind of started getting in these shoes. But what do you trade from work? Do you trade before? Could you explain a little bit?
Sure. And and it's difficult. And so for my first like year and a half, when I was mainly trading the OTC breakouts, I was swing trading them. And so one thing is like I was playing the daily chart, so I was playing longer term trends. And so my entries weren't super important. The exits like ended up being like a lot more important. And so the market opens at 7:30 my time, and I generally tend to head into work around 9, so I can play like the first like hour and a half of the open from my house. And so that's like when, if I was swinging in stock, like I'd have plenty of time to sell it into whatever the morning price action was. And then now with that I'm doing more day trades, most of them tend to be early morning trades, generally getting in pre-market and almost being out of the trade by the time the market opens, and then definitely like selling before like the midday. Or if I'm shorting, those ones are ones where I can enter in the morning, and then I'll usually just put in orders at targets like where I think the stock might drop to on, if it's doing a little bit of consolidation and then has like a hard crack, it's usually going to bounce off the next support level. And so I'll put in like orders to scale out like at those levels. And then usually throughout the day, I'll have to like check on my phone and like see like if I need to adjust those orders. And that's not like I think it's TOS mobile on my phone. It has like really good charting. And so I'll have that open like all day with either my watch list or like just a specific stock, and like watching like the level 2 or the chart.
Sound familiar, Matt?
Yes, Thinkorswim Mobile is a lifesaver, I will say.
Yeah.
Now, my favorite question is just if you had to start all over again with just $2,000, right? How would you go about growing this account to eventually make it to the PDT and beyond?
Starting with $2,000, it's going to be very difficult.
Yeah, so you can keep all the experience you have now, right? But you're just trapped with a $2,000 account. How would you do it?
I would have to just focus. I would probably choose either just like one or two of my top setups and just exclusively trade those. In my case, I would use the Kelly Criterion to decide like how much to risk. And I would probably be a little bit aggressive early on, because $2,000 that's a really small amount to start with. I think it's difficult, like below like $10,000, it gets like really difficult to see account growth just because of how much commissions and fees are going to eat into your profits, or having to pay for like scanners or platform fees. But it's pretty much, I guess it's the same thing as I would do with a bigger account if I wanted to grow it. It's just you got to focus on what you're best at and not be taking random trades and not take bigger losses than you intend to.
Now, if I was to loosen up the rules a little bit here, what account balance would you want to start with? Or do you believe has the best chance of success?
$25,000.
Yeah, keep your experience, I guess, for you personally. And then maybe, if a total beginner was out here, what would you recommend they start with just for the best chance of success?
I think with experience, really it is going to be somewhere over PDT, closer to $50,000. A total beginner, though, I wouldn't say that, because then you're going to have the temptation to trade bigger than you should when you don't know what you're doing, and you'll have a better chance of losing that. I think about $10,000, 10 to 15,000 is kind of as low as I would want to trade. Again, just based off commissions. I think you need to be trading at least $1,000 position sizes to get over most of the broker's commission fees, to the point where they're not really affecting your trading, because the commissions will be maybe 1% of your potential win in that case. So there's probably if you have much smaller, $2,000, first, you're probably not going to be living off of that, so you probably have another job, and it would be a good idea to try to save up more money.
Good advice there. To just finish wrapping this up for me, but what's next for you? You have this long-run goal to eventually switch over to day trading. But in the next 6 to 12 months, what are you looking to do? Whether it's in trading or your life, just what are your plans?
I think the main thing that I'm going to focus on, especially for the next 6 months, is finally just growing my account as much as possible. Up to this point, I haven't, besides when I was losing at the beginning and just wanted to get back to break even. That was kind of the time when I was most determined to grow my account. And then after that, it switched more to just wanting to learn how to trade better. And I think I'm back to the point where I have the variety of setups that I think will satisfy my need to trade for a while. They will give me enough opportunities and have a big enough edge that I'll be content just trading these setups. And I think I just want to try to grow my account now as much as possible and just see what I can do.
Do you have any plans of stopping working full time in the coming future? Is that going to be a while out until you really? I know you said you had some, you wanted to make sure that you were really felt you were there before you did quit your job.
Yeah. Now, the main thing will be, I've got some, consumer debt that I need to pay off. So, as part of, probably over the next 6 months as I'm growing my account, I'm going to be trying to pay down all of my debt and get my living expenses as low as possible. And then it's a combination of, once I have all my debt paid off and my account is big enough where I think that I'll be able to make quite a bit more income than I'm currently making in my job, then I'll be ready to quit and just give this a full-time go.
Awesome.
Yeah.
That's a great plan, great goals. And I mean, we're definitely watching you, and I'm sure the listeners are over the next 6 to 12 months on your progress. And we definitely would love to have you back on sometime in the future for a checkup episode.
Yeah, this was fun.
Yeah.
Yeah. Thank you so much for coming on. Again, we wish you the best of luck. And we see you working out there. So it'll come, obviously.
All right, great. Thanks for having me.
Hey everyone, it's Matt again, and thanks for listening to the entire episode with John Papa. If you have any questions, concerns, or recommendations for us, please hit us up at beyondthepdt.com. We'd love to hear your feedback and any recommended guests you'd want us to have on this show. Also, if you don't mind, please share this episode with someone who you think could benefit from hearing these stories, and maybe they haven't heard of this podcast as well. And with that, thank you again, and I'll catch you next week on episode 17.